Testing, 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 testing. JB here, December 18th, 2023. 2 weeks left in 2024. So interesting times. Just going to get on really quick to talk. I've ranted a lot the last week or so. So if you've missed some of the commentary around Trupanion, Fiverr, Clear Secure, things like that, go back and look at some of those other rants. So first, I'll just talk about Biogen. So Friday was an interesting day. Sure enough, what DocuSign has some rumors, or at least a report from the Wall Street Journal. They're going to get acquired, or looking for suitors, or for a potential sale. The stock skyrockets by 57 calls. I got it at 22 cents. I think they went up to 750 or so. Crazy stuff. On the flip side, I was looking for, well, I wasn't looking, but then I thought on the flip side that people would start looking at Adobe as a possible suitor. They had their other acquisition that didn't go through. Was a Figment? I forget what it was. So maybe now they have more leverage to do some other acquisitions. They're kind of similar space. Well, Adobe infringes a little bit on DocuSign space. I don't know if it would be a monopoly if they acquired them, but I thought possibly when you have these companies that are acquiring another company, you usually see that stock go down. So that's why I went and got those lottos. Those didn't play out. I used to be a little more aggressive on some lottos on Fridays. It was what $5.1 trillion in options were expiring, triple witching. They great for headlines last week, but here we are, 7 weeks in a row to the upside for the S&P. The Dow closed at highs on Friday, and market just keeps melting higher. Who knows what's going to stop it here? There's not much in the way of catalyst this week. Earnings season winding down. You still have Nike. Who else? A couple other names, not many. And then we have the PCE data on Friday. You already have pretty much the market pricing in 1.5% rate cuts. The Fed is pretty much setting the stage themselves, saying they're going to do 0.75% rate cut, and the market's pricing in double that before the 2024 is out. Friday, you saw a little pullback as I forget who it was. One of the Fed officials came out with some comments, kind of like trying to keep everybody not too excited on cuts just yet. But it looks like at least March, maybe May, we'll start getting that rate cut cycle, and that's good for housing. So I put on the watch list the last week or so around some of these catch-up plays. The biotech space, I think the IBB is up 1 or 2% for the year. Nasdaq's up 41%. S&P's up 20 whatever percent. So the biotechs have been underperforming. A lot of it has to do with capital. So some of these, especially early stage bio names, they need money to do their studies and to trials and all those things. So as the cost of money goes up, as rates go up, it's a lot more expensive for them to raise money at higher rates, or less folks are looking to help them out. So the biotech names struggle. So hopefully as rates start to ease, subside a little bit into 2024, I think the biotech's going to be a great spot. Biogen still down on the year. It's had its ups and downs. But I think there's an opportunity, at least to 260. Oppenheimer this morning raised their price target to 295 from 280. It's just muddling around here, barely up 1%. I think it heads to 260 plus by the week's end. I'll continue to hold those calls. That's kind of my thought process. The other name I'm looking at is Gilead, right? So another one of those names flush with cash. It just been struggling, especially after everything going on with COVID has kind of subsided. So this Morgan Stanley was the last analyst, cut their price target to 84. So I'll probably be able to stay away for now. But those are some reasons why I'm looking at Biogen. DocuSign, Adobe, Zillow, and Redfin. So a lot of articles this week, and I put on a watch list this morning, or continue to be more headlines around the housing market. It's pretty obvious. If you have a house that you want to expand, or you want to move because you want to get a bigger house or a bigger property, or you want to move to a different state or what have you, but you have a low rate, it's probably not the best time to move, because unless you're paying cash, if you have to get another mortgage, it's going to be at possibly a substantially higher rate than what you have. And so then on the flip side, there's a pent-up demand as well. There's people who want houses, so there's not as much supply as they want, and then rates are high. So some people are probably waiting, or unless they do an adjustable rate mortgage, but you have to think that that's going to start to pick up. We've already seen, 6 months in a row, I think, mortgage applications have increased. you know the names I like, and I still have my Zillow 60s. I wish I had the I had the 50s still. Redfin might be another name I look to trade on. I've always talked about the real estate market and sector as one of those last sectors that needs to be disrupted, and there's companies are coming out to try and to do that. But the real estate transactions are just the most archaic transaction on the planet. From all the documents you sign, all the things you have to go through, surveys, and even insurance, all the fees. Everybody's hands are in everyone else's pockets, and the pockets of the people, the buyers and the sellers, right? That's all it is. The buyer and the sellers are the ones who get their pockets picked by all the folks who are in the real estate transaction, and all the fees to the title companies and all this. There's just so much that goes into it. Someone's got to come and disrupt it, streamline it, and get the cost down. And that's why I like the free market, right? The free market is the best market that's going to be able to fix that in a orderly fashion. Right now, I guess the free market says, let's give real estate agents 7% or 6% or 5% commission on a house. Let's pay the closing the lawyer, the closing lawyers, all that fun stuff. But anyway, and that's Zillow tried to do buying and selling houses on their own. So they would buy the houses and then try to resell them. That didn't work, so they nixed that. But Redfin's trying to do that kind of all-in-one transaction where they have the title company and all that sell the house for you at a lower commission. But both have fallen. Obviously, Redfin has fallen a heck of a lot more than Zillow. But I like Zillow here for over 60, into January, and I might look to get some Redfin at some point. Zillow's been on a crazy tear already, so probably as much as I'd like to see it at 60 right now, it's probably a good thing it's churning a little bit, consolidate, and then it can head to the next leg. So that's Zillow, that's Redfin. Trupanion. What else can I say on Friday? So Thursday after the close, right at 8 o'clock, so right when after hours ended, and I talked about this on Friday, Trupanion and Aflac, they announced that they weren't going to do the partnership deal in Japan. So what happens is Aflac has 50 million insured members, right? So they insure 50 million people, and I don't know how many it is in Japan, but they offer already pet insurance as an option for folks in the U.S. Partnership with Trupanion. Trupanion is the provider of that. Aflac, all it is their website, and they just create a platform that's easy for folks to sign up for, offer automatic direct withdrawals for month to month for folks who want to sign up for the pet insurance. They were going to do that in Japan, and then that news came out last year, and then it seems like maybe there's some hiccups. I don't know if they can get, it's probably, in my opinion, they probably can't get the vet offices to get on board with the program, and because of that, they're pulling out. But they don't give the details. They just say they're pulling out. We're focusing on the U.S. market and committed to their $200 million investment in Trupanion. So, the shorts take that as another miss by Trupanion, failure to execute, horrible leadership, all the things that you would want to say if you're short the stock, which I get, right? If you're short the stock, you're going to probably be more biased towards the negative news than someone who's long the name, right? So, I'm not going to sit here. I've been piling through their filings. I've been going through some of the transcripts on their earnings reports, and and there's a lot of people who've posted some short pieces over the last couple of years. There's one who posted one in 2020 in the summer. I think the stock was, I don't know, it was 40 or 50 bucks. But a lot of stuff in the short report hasn't come to fruition. They were saying what was going to happen within the calendar year, which would be 2021. Well, here it is, three years and like 3 months removed from the report, and all the stuff that they talked about didn't come to fruition. So concerns with Trupanion is their margins have come down. And some of that is because of inflation, right? All these prices have went up. All the costs, services, food, of course, some more than others, food and auto and things like that, because of inflation. But when you have these insurance contracts, people sign up and it's for 1 year, or every year you have to re-up it, right? So what happens on that 1 year? They raise the prices typically, but because of the inflation, Trupanion was behind the ball, and they're not able to raise prices on people till their contract's up. So when inflation's going up and you have someone who has a 1 year contract and you can't up the price until that 1 year's up, of course, cost of the vet goes up, but the cost of insurance stays the same. Their margins are going to go down. It's just a function of his easy, fuzzy math, whatever you want to call it. But the bears are saying their margins are eroding. Paint this picture. They're raising prices. Yeah, they're raising prices because there's inflation. And it's a typical cycle of insurance. Someone posted the other day a link to someone who says, "Oh, I worked in insurance. We used to have contests to see who could deny the most claims." I'm like, they're a business, right? If you're a business, of course you're insured. You want to try your best to to deny claims. And ultimately, it's not the best business for customers, but that's a part of insurance business. They deny claims all the time. It happens. But when you're a bear, it's easy to put your finger on one or two things to try and create the fear, uncertainty, and doubt. So I was here at $32. It was down 8% on Friday. I locked some of my January strikes, and I'm not going to add anything here just because it's volatile, and any little negative news, it seems to be very susceptible. Even this morning, it opened at 32, and within about 10 minutes, it's down to 30.87. And if you watch the bid and the ask, or the spread on it's like 50 cents. Which you look, that's like 6%, right? So there's a 6% spread on the bid and ask. And if you watch the bid, there's one or two contracts going through on the bid. So to me, you have 42% short interest on the name. Someone's loaded to the gills in shorts, in short to stock. They're going to use any means necessary to make that their bear case come to fruition, which, unfortunately to me, is probably hitting the bid to try and induce selling and to continue that theme of fear, uncertainty, doubt. So that's Trupanion. I don't really, want to go too much in a rant on there, but that's kind of my thought process on why, I think they have it wrong. Well, mostly wrong. Trupanion it went up to $160. People make the comparison that it trades like it's a tech or a software as a service company, when it kind of is. Trupanion is the only insurer that can do the direct to vet the same day with reimbursement. Their platform is phenomenal. So you type in the pet, the age, the zip code, and it gives you pricing right off the bat, and it's based on breed and all that. So it's just a lot of stuff. It's not just, hey, we're just a pet insurance company. And there's a huge addressable market. One of the bear pieces talked about age for pets, which makes sense, right? You want to have the younger pets because as they get older, they have more ailments. And then they talked about the big bull case. So one of the bull cases for me on Trupanion is the addressable market, which I don't know if it was however many million pets there are, 123 million dogs or something in the U.S., and only 2 to 3% of them have pet insurance. So their rationale for saying that the addressable market is wrong, that the penetration to get 25% shouldn't be based on 120 million dogs. It should be based on like 30 million dogs because the cost of pet insurance does not fit the entire population. But you can make that rationale for any products and service, right? So you can take a look at Netflix and say, or Disney Plus bundle and say, well, someone who makes under 50 grand doesn't have the discretionary income to sign up for a service like that. So the real addressable market for Netflix and Disney is half of what the folks are talking. Okay, I guess so, right? But again, I always talk about the pets. It's a different category. It's like some people treat their pets better than their children. And if, in bad analogy, but not bad analogy, but if the dog's on the, if they have to pull the plug on the dog or the kid, some people might pull the dog on their, I'm being sarcastic in a way, but that's how loyal people are to their pets. And they paint this picture about negativity around insurance, but it's like, who goes on a forum and posts positive stuff about an insurance experience? Most people don't. And it goes with everything. And most people don't say too much good things unless it's a really, really great experience. Most people, all they do is talk about bad things. And then that person tells, seven other people. So that's my rant there on Trupanion. Other names I was looking at, tough this week. I'm probably just going to keep things a little small as I scale out of positions. SSYS back over $13 for a little bit. It's right here, $12.90. At some point, I'll lock some more of I want to close the rest of my Januaries and just hold the March 15s. TripAdvisor up. I'm still holding some 19s. I'll probably lock some. I'm not all of them yet because I think once Trip gets over $20, I think it's off to the races, especially into 2024. Take a look at Roku. The fall over the last week or so. That's a name. At some point, I'll look to try some lottos. I was looking last week, and every time I looked at it, it was falling. So it's down here at the lower Bollinger Band. 92.19 is the lower Bollinger Band, so maybe at that point. We'll from what else? I think that's it. I'm trying to think of anything to rant. I don't really have much more to rant about. How funny is that? So Alteryx, however you pronounce it, ticker AYX. There was rumors I was going to get acquired, and I think that was already priced into the stock, so it was pretty much a zero premium deal. So they're being taken private by a private, I don't know if it's an equity firm or what have you. But AYX was one of my top 5 stocks for 2018. DocuSign was one of my top 5 stocks. I don't know if it was 2020. I'll have to go find the link. So those are two who knows if DocuSign is going to be acquired in the next 2 weeks. But another name that has been acquired from my top 5 list, HSKA, which was acquired in the spring by Mars. That was one of my top 5 stocks. And then, Intercept Pharmaceuticals. And I think that was all the way back in 2017 or 2016. So it's funny. I put it on out on X last week just to try and get some ideas, because I think it's always good to get as many ideas as you can to research. And sometimes you overlook things. And I think it was 18% of my top 5 stocks since I started doing this in 2012 or 2011 have been acquired. Now it's got to be 21% or so. If DocuSign gets acquired in the next 2 weeks. I think that's it. Anybody doing the 2K challenge, I'll have the details. There's emails. The details will go out towards the end of the week. But if you sent the email, you just assume that you're in, and I'm sure you'll get a response in the next day or two just to confirm that you're good to go. But I want to be convicted in some names to trade for upside. Some of these, like Zillow, I mean, it's up so much over the last couple of weeks. It's tough to kind of like get a little more aggressive. So I'm probably just going to sit on my hands and be patient this week. And then Friday, right? So Friday is technically the official start of the Santa rally season. So it's the last 5 trading sessions of the year, and then the first 3 trading sessions of January. It's the historically strong performance period for stocks. There's no true explanation. Is it repositioning, people tax loss selling, and then people repositioning and trying to play catch up on some of these other names? Who knows? But it's usually a pretty good run. But then here we are, the market. I mean, Dow closed highs Friday. I mean, how much higher did we keep going? So I thought we were going to get some chop, maybe back down to the upper Bollinger Band. So typically, I like the Bollinger Bands because I use them to kind of, when things are oversold, overbought, and I think a lot of times when they hit the upper Bollinger Band, you would imply that's overbought, and if it's up at that upper Bollinger Band a lot, there's going to be some kind of snapback. But the S&P has closed over it 3 days in a row. It looks like it's going to be the 4th day in a row. I don't think I've seen that in years, so I'd have to go back probably the COVID rally. We had a couple of those, but I'm surprised we continue rally. And I mean, it's good. I mean, I don't have any puts, so would love to see things continue to rally. But at some point, we're going to have at least a churn or consolidation, you would think. What do they talk over the weekend? There'll be some commentary that says, the folks are perusing the Fed comments and statement to figure out what the Fed's going to do. Like they're still figuring out what they're going to do after Wednesday. I don't think that's the case, but maybe it's just the market repricing itself after the dovish comments from the Fed and Powell. That's probably more the explanation than anything else. That's it, folks. Let's have a great day. I'm not going to be on the audio today, but I'll try and get on again tomorrow, hopefully earlier if there's anything going on. If not, I'll get on later in the day. Rock and roll.